Welcome to the daily update, where I'll go over the action in the market for Friday, September 12th, and we'll see how things look for Monday, September 15th. Pretty quiet day on Friday. We're still looking positive. We were down just a little bit, virtually unchanged, but a little bit negative for the S&P. But we're seeing the NASDAQ and NASDAQ 100 going up and setting new all-time highs. So let's go back through and talk about what happened. We had a flat open. Prices chopped above and below the unchanged level. Not an awful lot of conviction there. Then prices did go up later in the day. We hit resistance at 6,600. So that was an intraday high that we set there. And then we declined after that to close slightly negative. We were down 0.05% on above average volume. Now, we've been seeing that picking up recently, and that's a little bit encouraging, but we just didn't see a lot of price action. We're still positive on all three time frames, short, intermediate, and long term. Interest rates did go back up, but we're still at the lower end of where we've been lately. And then in the upcoming week, we have the Fed coming out, and there's a lot of anticipation about that they're probably going to cut rates. Now, the market's been going up, hoping that's what will happen. Be aware, buy the rumor, sell the news. The market's been going up, and based on this, when it finally happens, are we going to keep going up after that, or are we going to see selling into that news, even if it's positive? And then, of course, all the geopolitical things going on, not really having a direct impact on the market still. So the NASDAQ and NASDAQ 100 did set new all-time highs. Mega caps had a pretty good day. That's really what kept the market together. And then we're seeing more conviction in the short term. StochRSI, Williams percent R, CCI 14 and 20, and the stochastics. These are the charts that are usually on this list when we're showing more positive conviction in the short term. Now, one thing that's a little concerning, we're far away from the 20-period moving average, and we're getting extreme with RSI 9. These aren't usually on the list. This just shows us that maybe we're going up a little too fast here. Intermediate term, we're still up in the +3 channel with the standard deviations chart, as well as the Arun. The Chaikin oscillator is still extreme. And then the Chan trend meter as well. And the money flow index, the percent B, that's 2 days now. We closed outside of the upper Bollinger Band, and we're also kind of far away from the 50-period moving average, the intermediate term. And then long term, we're kind of extreme with the 150-period simple moving average study. But then there's another 200-day simple moving average study that I show, and I'll show it later on here. We're getting kind of far away, not using the oscillator approach that I usually use, but just on a percentage basis. We're getting kind of far away from the 200-period simple moving average. Now, other times when we get above that 10% level, and there's no magic to 11, 12, 13, 14%, at some point we've seen pretty significant declines after that. So I'm not saying we're at that point. We just want to keep an eye on this. The further we go above the 200-day simple moving average, the more vulnerable the market does become. No real change to the overall scenario, and we'll see if the Fed has anything to add to that in the upcoming week. That'll be at 2 p.m. Eastern on Wednesday. The dollar was up. Interest rates were also up. We're at 4.06%, which is up from 4.01%, but way down from where we have been in the recent past with the 10-year yield. We ticked up one notch. We're still neutral, though. This is the surprising thing. When we're hitting all-time highs or close to it, we generally see sentiment at 65, 70, 75, pretty high. It's still coming in neutral. This could actually be beneficial to the market because you have a lot of people that don't trust this up move that's been happening, and there's not the euphoria that usually happens. And so maybe that means that we will continue to go up. And then eventually the folks are going to go, oh my gosh, we're going up. I need to get in. I have a fear of being left behind, FOMO, fear of missing out. That's when the market turns more euphoric. And we're not at that point right now. We are positive with our trend, both in the short and intermediate term. And I have the bias at mixed because we spent most of the day like going above and below the unchanged level. Not a lot of conviction in Friday's session in and of itself, but I'm still treating the momentum the last 2, 3, 4, 5 days taken together as positive. So we just had consumer sentiment coming out, and that's dropping. We're at 55.4. They expected it to come in up from the previous reading at 59.2, where it had been at 58.2. So folks are a little apprehensive about things, not as happy as they had been. And then a year ago, we were at 70.1. So it's even dropped when you take a bigger picture look. So here is the chart. Excuse me. And this does break it out a little bit. We have the total reading, which is going down. That's in blue. The purple line, that's how people are feeling right now. That's also going down. And then expectations, that's looking out into the future. And all of these are declining. So there's some real pessimism going on right now. Then here is the chart where we're seeing a bit of an improvement and now we're starting to fall back. I also put the 2-year treasury yield on here where we are declining with this as well, just to give it a little bit more context. All right, then we have money market funds, total assets. That's where most of the money is coming in here, and we're seeing money go in. Now, it doesn't necessarily mean it's a parking spot before it goes into the stock market. Some folks, they don't want to put their money into savings accounts, so they put into a money market account. It's still just as liquid, but usually gives a better rate of return. And that's as far as it goes. It stays in that money market account where we're actually seeing the Fed funds rate coming down here. All right, then the bull market is almost 3 years old. This is just comparing where we're at here in red when we started in October of 2022, and then comparing it to other bull markets along the way. Advanced share buybacks by year, a lot of share buybacks. That's usually a sign of confidence in a company. But the gray area, those are U.S. buybacks, and then non-U.S. buybacks are also in here. But we're seeing really high levels. But remember, these are announced. They haven't actually happened. It just says we plan on doing this. Usually there's a separation between the announcement and then what actually ends up happening. And gold sets new inflation adjusted peak as bull run continues. So gold is breaking out after it had gone sideways pretty much back to last spring. It's finally starting to break out of that. Then year-over-year growth in cash use here. CapEx, we're seeing an awful lot of money going in for capital expenditure, especially the big tech companies. They're just throwing it into AI. And they see that really increasing here. Also, research and development. You can see how that's going. And dividends, that's profits that shareholders get to partake in. And then buybacks, also a lot of that. And this also makes the company's books look a little bit better because then they have assets that are increasing in value and they can include that in their earnings. And this is what we see all the time here. U.S. stocks on a valuation basis still overvalued and then comparing it to the rest of the world. Then I did go over this in Friday's video. This is a breakout of the individual investors. This also could work to the advantage of the market too, because the red line is above the white line here. That means they're more bearish than bullish. And again, individual investors tend to follow what's already happened. And we're setting all-time highs and they're still bearish right now. At some point, if we continue to go up, they're going to be afraid of being left behind and they're going to want to jump in. You can see the spread between the two is still below zero and declining here. So they're not really trusting what's going on. Now, that's negative in and of itself. That's more of a sentiment gauge. But we can also look at it in a contrarian manner as well. And then we see the 8-week or 2-month moving average here, where the red line is above the white line, more bearish than bullish. Then the gap between the Mag 7 and the rest of the S&P 500 in earnings growth, this is what we're looking at. And most of the thrust is really coming from the really big stocks. The liquidity and the yield curve, they're projecting that this will go up. The 10-year Treasury yield less the Fed funds rate, they're thinking that that will go up as the M2 money supply goes up. Now, that could be inflationary, potentially. So excess economic liquidity for M2 and the growth here. We saw a big growth in that during the COVID plunge. And then money was coming out of the system, and now it's starting to come back in, which could end up being inflationary, as I said. Then now we're not really talking about government shutdowns right now, but I ran across this chart just showing how does the market perform when the government does have a shutdown, because there'll be another one, and this is a political trick that is used, and they close national parks and museums and things that people really see and not really changing anything under the surface. It's just a political maneuver that goes on here. But when there are shutdowns, the market tends to do pretty good after that. Shutdowns adds drama. It makes front page news. It's pop news. Everybody's freaking out. They're talking about how nobody will get their Social Security checks, which won't happen. But stocks don't really care. They might be a little bit negative in the short term, but longer term, they tend to do well. All right. And then margins and recessions here, just showing current with the profit margin around a recession. Well, we're kind of going back up. We're still above zero here and just trying to track the average over a period of time. So, which is not what is happening now. We're actually seeing margins improve, and that's just meaning that companies are more profitable, which is positive. And then estimates. And I'll be going over this in the weekend videos. This is earnings per share estimates for the third quarter. We're seeing the S&P going up, and we're actually seeing not much of a change here when you look at the whole S&P, but we're seeing how this is growing overall. And here is the chart. Pretty boring day, just pretty much flat, above, below the unchanged level. A little bit of a shot up here. We hit resistance at 6,600 and then closed down slightly higher. Now we did for 2 weeks now, we are above that long-term weekly chart overhead resistance at 64.68, and we've now cleared that for 2 weeks. So that's positive as well. And then here is the intraday chart. Seeing a lot of the action, not much on Friday. It was a pretty comatose day overall. And things settled down pretty good after we got into the close. Still looking okay here with the blue line above the red line with the growth to value intraday chart. Improving a little bit here. We look at the bigger picture as well, going back to the beginning of September. We want this ratio to go up when we're more positive on the market. And so growth was up where value was down, and growth was down more for the mid caps and down more for the small caps. So pretty much the strength that we saw was in the S&P large caps in Friday's session. So, and this is a concern. We've been trying to go up with the small caps, but this ratio continues to go down. It would be much more positive if the index was going up and this ratio was going up at the same time. And kind of a similar approach, but not quite as negative. We're still above the 50-day moving average with mid cap growth to value. And we came back down a little bit here with S&P growth to value on an end of day basis. We can't seem to get above this 50-day moving average. That would be more positive if we can get above that and then stay above it. And looking okay, but not great right now with this growth to value ratio. But we are looking pretty good here. We ticked down a little bit with discretionary to staples, but this has been a better performing area of the market, and that's more growth oriented. So that would be positive. And we are setting new all-time highs again with the large cap growth. That's really where the strength came in on Friday. And we're seeing this ratio continuing to go down. This is value to tech or growth. And when this ratio is going down, that's more positive. So we are trending now. A little thing to be concerned about is this green line is getting kind of close to 40, and sometimes that's about where it tops out. But we are positive with the green line above the red line. We're above the moving average and we're going up. So that is a positive strengthening short-term trend. Also a positive strengthening intermediate term trend as well. And we picked up a little bit here with volume here. You can see the last couple of trading days, we actually saw above average volume. And it's still looking good here. The VIX is below 20, both with the line chart and the bar chart. But we're wondering if that seasonality is ever going to kick in. We're getting up into the middle of September, which the middle part to the latter part of September is the worst performing time of the year on a seasonal basis. Is it going to play out that way this time? It hasn't happened yet. We were waiting for it in July. Didn't happen. August didn't happen. So far into September, hasn't happened. But it could change. And we're seeing a little bit of a pickup here with the VIX of the VIX. This is the volatility of the VIX still coming in above their moving averages. So we saw a bit of a tick up with this fear gauge and a little bit of a tick up with this other fear gauge as well. So a little bit of fear coming into the market. Could be some positioning ahead of the weekend. Because if you go back to 2023 and 2024, the Friday, Monday carryover, the weekend trade, those worked out really well. That was some of the strongest moves that we saw. It has not worked well in 2025 because something can come out over the weekend that the market can't react to, either positive or negative. And we're seeing sometimes these big gaps. And with all the crazy things going on right now, who knows what could develop over the weekend, or it could, let's hope, be a quiet, boring weekend where we just worry about football and baseball scores. All right, so we saw a bit of a coming down here with the daily chart of the equity put call ratio, but we're still going up with the 5-day chart. We're actually continuing to decline with the 10-day chart, so not seeing a lot of confirmation there. And this is still looking okay. The risk on to risk off ratio is now breaking out a little bit more, and that's positive for the market. We're also breaking out a little bit more with the high beta to low beta ratio, and that's positive. And we ticked down a little bit, but we're still above the band here with the volatility risk premium, but not seeing an awful lot of excessive fear in this chart either. So we came down after setting an all-time high with the advanced decline line based on price and volume, but pretty sleepy day, tended to lean more negative than positive. Coming down, but still above zero with the short and intermediate term advanced decline ratio, and just chopping all around here with our 10-day advanced decline oscillator, not picking up an awful lot of conviction. We trailed off here with the new highs, no real expansion of the new lows. It's trying to turn the 5-day back up, but we're pretty much flat with the 10-day when we look at the moving average over a period of time of the new highs, new lows. And this is an internal measure that we look at to see how healthy is the S&P 500. This is looking good, but showing a little bit of weakness. Accumulation distribution still above the moving average, but the boom indicator did come down, but it hasn't quite crossed below the moving average. And we're actually turning a little more negative now with the chicken money flow. We were positive after Wednesday now and Thursday. We were negative after Wednesday, positive after Thursday. Now we're starting to drop back down after Friday's session. And we're negative after being extreme here with the chicken oscillator. That is also negative. So not a lot of positive action happened on Friday. But we are positive here. The vortex is positive with the green line above the red line. The one thing to be aware of is we're down close to this red line with the other red line, the selling, and that could be considered getting extreme, and that may start to pick up. We're not really seeing it yet, but just something to be aware of. And we're seeing a little bit more weakness coming back in when we look at the mid caps and small caps advanced decline lines. Even though we declined with the NYSE common stock and the S&P, we're still above the moving averages. This is still looking good. A 5-period moving average of the highs and lows across the broad market. This is continuing to go up, and that's positive. And we came back down with the stocks in the S&P above their 20-period moving averages. We had gone negative. We had actually dropped below 50, and then we came back above it, and we saw a bit of a pullback in Friday's session. Also, a little bit of a decline with the 50, 100, and even the 200 moving average study. So looking good here. We're so far a little bit above this pivot point here, even though it was a down day. We're above this more shorter term resistance right now. This is on the daily chart. The weekly chart I'll talk about here in just a moment. But the chart pattern is looking fairly healthy for right now. And we dropped to below average here with volume, or we're slightly above average. Just about even with each other. So a little bit of a tick down with the 20, 50, and 200 period moving averages. But the conviction that I'm talking about, the StochRSI is still looking positive. The Williams percent R, CCI 14, N20, and all three stochastics charts are extreme. Came down a little bit with the slight down day here. But this is still looking positive across the further subdivisions of the short-term time frame. Came down a little bit, but still above the midpoint with the force index. Still looking good here with the short-term trend. We're above the green line and the blue line. Still in the +3 channel with the standard deviations chart. Came down here with the balance of power, but overall it's been improving and it's still above zero. We're still looking extreme with the CMB composite. And this is the other 200-day moving average study. This dashed line, this is 10%, and we're just a little bit above that. If we continue to go up from there, other times when we exceeded this dashed line, at some point, there's really no magic value here. We just start watching this once it gets over 10%. But that's when we saw fairly significant pullbacks somewhere along the line here. So we just want to keep our mind aware of that. I'm still positive with the go, no go, still positive with the highest high value chart. On day 93 now of this trend that started back in May, proper order, still showing a positive trend. We're showing some continued follow through here with the TTM squeeze. That's now turning more positive. And we declined, but we're still above zero and still really hugging the flat line here with the ease of movement. The Arun going sideways right now, just showing the buyers are in control versus sellers, but now it's looking a little extreme. And where we had gone positive after Thursday with the McClellan oscillator for the S&P, now we're back down to below zero. So we're declining a little bit here based on price, but we're still going up based on volume. So a bit of a mixed picture there. We did decline, but we're still above zero with the NYSE McClellan oscillator. So we're going up based on price and volume with the summation index. And we're seeing another mixed picture. We're declining with the Swindler trading oscillator based on price, but we're still going up based on volume. Still positive with the Elder's Impulse system for the S&P. Still positive with the parabolic SAR. The dots are underneath. We're improving as far as momentum. We're trying to cross above the moving average with the PMO. Turning up, but pretty flat here with based on price. We are seeing some improvement here based on volume, but not enough to get above the moving average. So we actually came down and dropped below 50 with the PMOs that are rising. We flattened out here just below 50 with the buy signals, and we're still flattening out and giving a pretty healthy sign here for the PMOs inside the S&P that are above zero. And we're turning positive here in the short term. We're crossing back above the moving average. If we cross above 7.5, that's when we start to get extreme with the slope oscillator. And we're turning more positive with the MACD. The oscillators that move slower are starting to catch up a little bit here. So in the short and intermediate term, we're improving, but we're still negative in the long term with the TRIX and KST long-term oscillators. We're turning positive with the Copic curve. And we're getting extreme here with the Sean trend meter. Other times when we got up into this dark green area, that it didn't necessarily mean a reversal, but it did mean that things could slow down. And we're still extreme with the money flow. We declined, but we're still above 50 with the ultimate oscillator. We declined, but still above the moving average with on-balance volume. We came down, but we're still just a little bit above the upper Bollinger Band here. So that's looking extreme. And we're just a little bit above 70 in the short term with the RSI, but bigger picture, we've been above 50, both with the short term and intermediate term RSI. Still positive here, still have a ways to go just to get down to this 10-period simple moving average, and the lines continue to go up. This is positive. Intermediate term trend, we're still above both lines. The red line and the blue line continue to go up. We're above all the moving averages, but we're kind of far away when we look at the 20 and 50 period moving average, and price has a tendency to go back to the moving averages when that happens. We're still positive here. We declined, actually we were unchanged with the bullish percent index, but the moving average has picked up a little bit, but this is still positive since we're just slightly above the moving average and still kind of chopping around, but positive overall with the NYSE bullish percent index, and decline, but still above 50 with the NASDAQ 100 bullish percent index. This is the chart I was talking about. So we got above it a week ago on Friday. We closed above this R1 pivot point at 64.68, and then we were able to add 1.59%. So this is looking healthy, and this is a long-term chart. This is weekly, and we're seeing a pretty healthy pattern right here, which leads us to believe that either we could continue to go to the upside, but if we do start to see a pullback, that's pretty much what it would be. It's not like we're going to see a character shift like the perma bears are probably calling for, that 50% decline, everything's going to go crazy. That could always happen, but the way the charts are coming together right now, it just looks like normal profit taking that markets do from time to time. But we'll evaluate it if we do start to see some weakness and see if it's changing character. And we're still at the upper end of this trend channel, actually coming a little bit above it now. That could be providing overhead resistance. So you look at the trending charts here, we're still positive with the Heiken Ashi, the Kegi chart, the Renko chart, and the three-line break chart. And we had enough of an upward move. We got above 6,600 there to draw in a new X. Point and figure chart, also looking positive. We're still working on a bullish signal here, an ascending triple top breakout that was generated back on August 13th. Long term, we came down a little bit. We had become just a little extreme here with the 150 moving average study, a little bit of a decline here. But this is a little different way of measuring this. This is just using static lines. The other study with the 200-day simple moving average, that's how far above we are from current price. And positive on all time frames across all the indexes, still negative with the dollar across all time frames, positive with commodities on all time frames. So we had communication, discretionary, those are growth areas that helped the market stay together, and utilities were up. Then we saw most of the areas ended up declining in Friday's session. So we have the NASDAQ and NASDAQ 100 setting new all-time highs. Canada set another new all-time high. Utilities, after just having a bearish MACD crossover, now they're having a bullish MACD crossover. And the Dow fell down below 46,000. And as I said, the S&P set an all-time high. Okay, so a lot of red going on here. The few green areas, this is really what kept things together. The big green boxes overall. And then the Dow, after setting an all-time high here, did pull back. It was a little weaker than the other indexes, and it switched back over to neutral with the Elder's Impulse system. And we were up with the NASDAQ, and that's setting another new all-time high, and we're above this R1 pivot point, which was providing overhead resistance. Positive with the Elder's Impulse system, above this R1 pivot point with the NASDAQ 100. So we're seeing overhead resistance being broken for right now. Can that continue? The longer we stay above this resistance, then if we come back down, it may provide support. And we're positive with the Qs, with the Elder's Impulse system. We're turning back to positive here with the momentum of the NASDAQ 100. And we're above this trend line going back to 2009 with the weekly chart of the NASDAQ 100. And just kind of chopping around here. We have a little breakout, breakdown, just really sideways action for the S&P 600. Small caps also, but this looks a little bit healthier here. This is a Russell 2000 small cap index. We're neutral after being positive with the small caps, and we were down here with the mid caps, also switching over to neutral after being positive. The Wilshire set an intraday high here, but was down just a little bit with this broad market measure. The same thing with the total US stock ETF, but still looking healthy overall. Financial sector still declining a little bit here, but looking good when you take the chart in total here. But we're just not really doing better here with the ratio between the financial sector and the S&P. We are still declining here with staples to the tech sector. That going down is positive, and that's still continuing for right now. The FANG index just barely here. It might have set a new all-time high here, but these are the really big stocks, and they're holding up better. So we have Apple, it was up 1.76%, getting really close to a golden cross. Amazon was down, coming and dealing with its 50-day moving average. Google was virtually unchanged, looking pretty solid though. Microsoft coming back up to its 50-day moving average and still above its 50-day moving average with Meta and above the 50-day moving average with Nvidia. And then we had a nice little 7.33% gain here with Tesla. And that's really what helped discretionary hold up better. And then Netflix, seeing a little bit of weakness here. A lot of sideways action lately and starting to drop below its 50-day moving average. And then I wanted to point this out. The Dow Jones Semiconductor Index is set. It broke out to a new high. It was up actually a little bit in Friday's session. And this one is also looking pretty solid here. Not really taking a leadership role, but still doing quite well in and of itself. And so we're seeing a little bit of an improvement with the semi to tech ratio. We want this ratio to just go up really solid if we're more positive on the market going up. And still seeing a strengthening correlation between US and world stocks on a short-term basis, a little bit of an improvement with the longer-term correlation. And we came back up here. We're in the 62 range now with oil, and we continue to be in a downtrend with the dollar. And we're still well below the 4.5% level. We came back up a little bit here with the 10-year yield. We were down here with the 10-year based on price. And seeing a little bit of an improvement with the Qs to S&P. We want this to go up in a more positive environment. Discretionary to the S&P is improving, coming back above the moving average. And we are looking good and been holding up fairly well when we compare large cap growth to large cap value. So the growth to value ratios are okay, but we would like them to do even better. And here with the large caps looking more solid, above the moving average with the mid caps, but still not really showing any strength here with the small caps. And still going down with the staples to S&P ratio. This is positive when this ratio goes down. So what's our outlook? We're still positive, and I'm still calling, even though we're above it, I'm calling it overhead resistance. It has to last a while on that weekly chart for it to actually turn into support. And then we're going to get the Empire State Manufacturing on Monday. Not a real big influential report. See if anything develops over the weekend. And then here is the calendar. So we're going to see retail sales. That's pretty big. And that'll come out on Tuesday, as well as industrial production and capacity utilization. And then the big thing is going to be the Fed on Wednesday. And then this should actually be gold here, initial and continuing jobless claims. And there's no economic reports due to come out on Friday. There's also a look at the calendar. Seasonally, neutral to positive with the Dow for September 15th, neutral to negative with the NASDAQ. Excuse me, but no real edge either way going back to 2002. Now we are starting to head into options expiration week, and we do tend to be up more than down if you go back to 1980. So we have a bit of a positive tilt there. And we do have another day or two of positive seasonality, according to Stock Traders Almanac, before we start to hit the second half of September, which tends to be weaker. This also shows how September does not have good returns going back to 1964. This goes back to 1950, showing how September is the worst performing month. And now we're getting into the second half of September, which is the worst performing half a month during the whole year, going back to 1950. May not happen this time, but they may end up happening. And this also shows the weak seasonality that to this point just has not developed yet. This also shows how there is weakness in the S&P going back to 1950. So on the negative side now, our smart money indicators are leaning more negative at this point. We're also turning negative again with the McClellan oscillator and summation index for the S&P. And we still have quite a long list of the positive things with our growth to value ratios, discretionary to staples. The NYSE McClellan oscillator, even though it declined, it's still above zero, which is keeping the summation index advancing. And we're getting a mixed picture here with the Swindler trading oscillator. Parabolic SAR is positive. The momentum oscillators are looking more positive. Bullish percent indexes for the S&P, NASDAQ 100, and NYSE are still positive. Ease of movement, money flow, ultimate oscillator, still positive there. The vortex is also positive. And the momentum for the NASDAQ 100 is also positive. And then the financial sector, when you look at it by itself, but still underperforming when we compare it to the S&P. And then the long-term special K chart is positive as well. And then here are the pivot points for Monday's session. So our conclusions, and really haven't changed this. Positive on all time frames, still counting that as overhead resistance if we can continue to stay above that. We're seeing pretty good conviction right now in the short term. If we do fall, we'll be watching the 20-period moving averages. Intermediate term, seeing some signs of improving. Gave a little bit of that back in Friday's session, but overall, we're still holding up for the most part, and we are still positive in the long term. Thank you. I hope you have a wonderful weekend, and I will talk to you in the next video.